you guys hear me? Just want to double check. Testing 1, 2, 3. Yeah, that's better. Okay. All right. Yeah, that's better. All right. Thank you very much for joining me. My name is Russell Shulman, Senior Market Specialist at FXCM, and this is the morning market review. It is Monday. It's the 13th of February, and my email address is rshaw@fxcm.com. Again, I'll try and look at the camera as much as possible, but I'm working between two monitors here. And I'm just going to go ahead and bring up the high risk investment warning. Hope everyone had a good weekend. And this is an important week. Tomorrow we're going to have the CPI. It's going to come out at 3:30 ZA time, which is 1:30 UK time. I think that all eyes are going to be on that CPI, and that there is probably going to be maybe either muted market activity before that, or perhaps some whipsaw activity. So I think that everyone's got to be very careful between now and then, because of course, if there is an upside surprise, it's going to hurt the markets. If there's a downside surprise, it's going to benefit the markets. Just going to bring up the market commentaries disclaimer. So what we'll do is we'll take a look at the real rate just to see how it's behaving. There's been some sort of disconnect between the bond market and the stock market, and that disconnect has, in my view, two meanings. It's not going to help us one way or the other. It really depends if there's an upside surprise or a downside surprise. We won't know until we get the data. But I'll show you what's happening in the meantime. Here is our references, Market Scope 2.0 and Trading View. Let's start off with Trading View first, and then we'll take a look at Market Scope, with the caveat that I think the trading activity is going to be difficult until we get the clarity of the release. Now, what we have here is the NASDAQ in the chart. The second chart is that real rate. We often look at this relationship. It's really helped us tremendously in trying to get some sort of analysis of the market. What's happening with the real rate is, of course, that it's moving sideways. I've drawn the trend lines. It's a triangle. It's a symmetrical triangle. What is a symmetrical triangle? Symmetrical triangle is effectively consolidation. Okay, so the market is the real rate is consolidating. It's not moving up. It's not moving down. The breakout here, I think, is going to be instrumental in helping us determine which side the markets are going. Now, the indicator at the bottom is the correlation coefficient. So we're looking at the correlation between the two charts, and of course, it's a fairly strong relationship. So it's at 60%, negative 60%. In other words, the NASDAQ moves up when the real rate moves down, and vice versa. However, it has been moving towards zero, okay, which means that it's losing some of that strength in terms of the correlation. That's okay. That's exactly what I'm saying about the disconnect. You'll see it clearer on the daily chart. So if we go through to the daily chart, you can see that the correlation on the daily chart has actually slipped positive. In other words, that inverse relationship has disconnected for the time being. And my interpretation of that is, when you can see that the NASDAQ has carried on moving up, okay, whilst the real rate has moved sideways, the NASDAQ has moved up. So the question is, why is it doing that? So the participants, the NASDAQ participants, are actually positioning themselves for a pivot. Okay, that's what's happening. So they're still expecting the pivot, and that's why they have been piling into NASDAQ. The real rate participants, they've taken heed of the pushback that the Fed officials are effectively giving us, and the real rate's moving sideways. This correlation probably reconnects tomorrow. I would expect there's going to be a reconnect tomorrow. How so? Well, assuming there's a downside surprise, then I would expect the real rate to shoot downwards. In other words, the Nasdaq carries on with this appreciation. The real rate starts heading towards a downside breakdown. Okay. Similarly, if there is an upside surprise, well, then the Nasdaq pulls back and the real rate starts doing for an upside breakout. Either way, the inverse correlation reconnects, and that reconnection only really is going to become apparent, I think, tomorrow, which makes it difficult for us to trade this sort of style, this method, because we've been relying quite heavily on the correlations. The correlations have really helped. When they break down as they are now, it's kind of, well, which side is correct? Is the risk market correct? In other words, is the stock market correct? Or is the haven side of the market correct? The bond players, right? That disconnect now is kind of throwing us off. Let's just take a look at US dollar and the real rate and get some sort of information there. All right, so we're on the daily chart here. The dollar players are actually following the real market players. So there's a very strong correlation here of 85. Let's just go through to the weekly. Very strong 75. So let's just let's not leave it at that. Let's just explore that so that we understand what's going on. The stock market has disconnected from the Fed officials talking back on this pivot. Okay, the dollar market hasn't. The dollar market has very much followed what the Fed officials have been saying. So again, we watch tomorrow. If there is an inflation upside surprise, I think that pushes the greenback up. I think that pushes the real rate up. If there's a downside surprise, then we get a push down on both of these. Now, the obvious question is, okay, what are we going to get? I can't say with any certainty, but let's just take a look at the CPI numbers. John, I see that your hand's up. If you have a question, just go ahead and type it through so I can have a read, and I'll try my best to answer it. Let's just go through to the inflation rate and take a look at this as follows. We'll look at it on a headline basis and we'll look at it on a core basis. Just take it off logarithmic. All right, so the headline number, the headline number here is coming down fairly aggressively. We're at 6.5%. What I want to do here is add a rate of change onto the rate of change. We looked at this on Friday. So we're looking at the acceleration of the rate of change, and I think that's going to help us come up with a hypothesis. Whether we are proven correct or not remains to be seen. So let's bring in the rate of change on the rate of change. So it's effectively what we call acceleration. And what we want to take a look at here, okay, I just want to make sure my settings are, yeah, my settings are good. All right, let's just zoom in. All right, now the acceleration is negative on the headline. So there's such a I guess a phenomenon called inertia. So I'm sort of not sure if I'm sort of being overly sort of analytical here, but effectively inertia suggests that it's very difficult to stop something that's already in motion, right? You've got to act on it with a sort of an equal and opposite force. In other words, the deceleration in the headline number has started. So I would expect headline inflation to continue coming down. Okay, so I think that that's going to be in the stock market's favor. And I have to put on subject to correction because, of course, I don't know. I'm just making an inference here. Let's take a look at the core inflation. So let's take a look at I can't remember the code. Let me just type in United States core. Okay. This is it. Now this is where it gets a little tricky. Okay, in that it is the core inflation is coming down. We're on 5.7% there. It's kind of tapered. So it came down strongly towards zero. It's come down strongly towards zero, but of course it's above zero. In other words, there has been deceleration there. We need to get below zero here. Without getting below zero here, we are heading towards a plateau in that core CPI. A plateau in our core CPI is no good. That's going to hurt the risk markets. So we've got to take a look at this on Wednesday after the data's out. If we get a plateau here, if we carry on sort of heading towards this zero, but we can't get negative, we hit that plateau and we're going to stick around 5.7%. That's way too high. That's way too high. The Fed wants us to get down to 2%. The only way to get down to 2% is that this acceleration here has to drop below zero. If we don't get that, then the markets are going to be rethinking the pivot, okay? Because you can't pivot until we get under zero here. Where there is perhaps some degree of, let's call it hope, is in what we call core PCE. Now, I'm just going to bring up core PCE. PCE and CPI are inflation series. They use different methodologies. CPI is effectively measuring a price of a basket of goods. PCE is actually based on a questionnaire that gets sent out to businesses, right? So it's a slightly different methodology, but they're very closely correlated. So if you take a look at the core PCE, there we do have, sorry, I put the wrong one up here. There we do have a negative. There we do have a negative. So just to take this analysis a little bit further, okay, I just want to take this analysis a little further, and then we're going to start looking at actual instruments and how they are behaving today. So just bear with me a moment. I'm going to take core, we're taking core PCE. Okay, let's get rid of this. Let's put core CPI underneath this, and then we're going to take a correlation coefficient of the two. Okay. All right. Let's make this a little easier on the eyes. All right, let's do a correlation coefficient. So it's USCIR. So let's go to indicators. correlation coefficient, and we're going to put in USCIR. Apply. And we've got an exceptionally strong 92%. So we've got to be very careful with the way that we read this. So two things can happen here. Either the fact that PCE negative acceleration may influence the CPI and pull that negative. That would be, in my estimate, best case scenario. Alternatively, the CPI taking off might push PCE back towards zero. That would be an adverse thing to happen. So we kind of caught in no man's land at the moment, which is unfortunate. But I'm going to suggest headline inflation is getting pushed down. PCE is getting pushed down. Hopefully those influences push that core CPI down. If we get that, then we are in potentially risk on sentiment market. Okay, let's take a look at some I'm going to just take a look at, it's the top of the hour. I'm just going to take a look at the DAX, and then we shall close up for the day. So let's just take a look at this on the daily. Okay, I've got a warning here that my internet's very slow. All right. I'll give it another minute or so. Let's turn off the camera, see if that helps. This is embarrassing. It's not coming up. All right. What we'll do is we'll just have a quick look at the DAX on this over here. All right. Let's take a look at it on a weekly basis. And what you can see is we've got this trough peak, high of high. DAX is in an uptrend on a weekly basis. We've seen that before. And finally got my chart open here. What we want to just keep a lookout for is it's gone to zone 2, is lost some momentum. What would expect, this is a bit of a warning for us that the market is now gone into that sideways no man's land ahead of that CPI. So what we want is we want DAX to come back into zone 1, which is in the upper red, upper blue. That would be very much, okay, syncing up our weekly chart, which we've looked at an inverse head and shoulders. It's also a higher trough followed by a higher peak. Little bit of ambivalence or sort of uncertainty that's coming to the market, and that's because going into this zone here. And I think that is telling the risk markets here very much nervous, very nervous, looking ahead to tomorrow's announcement. I think if there's any questions, now's the time to type those in. Otherwise, we can conclude at this point. Tomorrow, we shall carry on looking at inflation. We'll do more work on to see. We'll do more work and see where the various instruments are placed relative to their zones. All right, let's wrap up here, guys. And I shall speak with you tomorrow morning. Have a great day and a great evening ahead.